What's up, everybody? Michael Silva here to do some technical analysis on the SP 500. We're going to be looking at the daily time frame and the 30-minute time frame to get a good sense as to where the market might be heading. We're going to map out supports, resistances, and everything that we need to know heading into tomorrow and the rest of the week. If it's your first time here visiting my channel, high five, welcome in. I do these videos Monday through Friday. Every Saturday I post my weekly scan, which is my weekly watch list. And then every once in a while I sprinkle in some quick tips as well. Let's get into it. All right, so we are here on the daily time frame. This market has been and continues to be a buy the dip, sell the rip type of market, where every time that the market pulls back, looks like it's a good opportunity to buy when it ends up hitting support, and then when it reaches into an area of resistance, you sell the rip. Yesterday, as you can see right here, it ran into this island reversal pattern acting as resistance. We talked about that on yesterday's video. The link will be in the description, or I'll put a link right up here if you haven't watched it. And then today, followed through with some downwards action. We mapped out this rising wedge pattern, which we were unsure if it was actually a true rising wedge, but it looked similar to what has been previously happening, so we kept it up there, and it looks like it's kind of sticking within that pattern. So we might have been early to it, but it looks to be somewhat accurate. But it will take time to see if it actually breaks through to the downside and maybe crashes below the lower trend line and goes maybe as low as the 200 period moving average or the 50 period moving average. Now, if you're wondering what these two boxes are right here, this red box and the green box, think of the green box as an area of support. We call that the bulls camp, and this red box we call the bears camp. It's a zone, it's an area of resistance that the price struggles to get through. So as you can see, this 3,000 range right here has been acting as a very strong support. I remember on previous videos right here, we were talking about, hey, if it comes down to 3,000, I think I'll be putting more money into it, and we're gonna make a good trade. And it came down, tapped it with its little tippy toe down to 3,000. I missed the trade, and it ramped up all the way up to our next area of resistance, which was 150, just above that to 3180. And now we're starting to see that pullback. So at this area right here, as you can see, I'll throw up a little screenshot. I did buy a small position on a short, selling the rip into this, as you would say, a couple contracts resulting in about 30% profit. Nothing crazy though, right? It was about, 180 bucks. Nice little trade for just, the day. Now there's some very important things that I want to point out on this chart, and I don't think that other people have been pointing out or are going to point it out until it actually happens. So I want to be early to it. What I'm talking about right now is a golden cross. What's a golden cross? It's when a smaller moving average crosses above a bigger moving average. Now, the Godfather moving averages that I use to really tell the context of the chart are the 50 and the 200. The 50 is the blue line and the pink line is the 200. These are well-known, well-watched moving averages, and when they cross has some sort of an effect on the market, and I want to point that out. As you can see, they're intersecting right here at this point. So when the price comes down, if it does continue to go down, that is, and it runs into these 200 period and 50 period moving average, right? And the prices right now is pretty far off of it. So the 50 period moving average is moving up towards it day by day, little by little. So if the price action remains to be above it, this blue line will definitely cross sooner than later over the 200, resulting in that golden cross. Now, when that happens, it's a very positive bullish sign for the market to move higher. Now, the exact opposite could happen, right? If the For example, right back here, this is known as a death cross. The 50 period moving average crossed over the major 200 period moving average. And if you map that down to this area, you saw a pull back of approximately 2,600 down to a low of 2,450. So nothing too crazy, right? But it did have an impact on the market. So then I was like, that's not that much to note. Let's go back into the history of the chart to see maybe if it did it more than once. So as we scroll back to the history of the chart, look for areas for it to cross over and have an impact on the market. Okay, so we're looking over here. This right here is a golden cross. Notice the 50 period going over the 200. Let's zoom into that. So as soon as the point crossed over right here, you notice that the market actually came up as high as 29.57 from this low point of 2,800. So that was, a pretty decent move up when the market crossed over. So there we go. We had one already interact poorly on the death cross, and now this one right here, this golden cross, we had the market, act appropriately for the golden cross. It was a bullish move. And yes, it did obviously hit these areas of resistance and move down eventually, which, the market ebbs and flows, but it's just interesting to see how the market responds really quickly to these golden crosses or death crosses. Now let's go back even further. See if we can find one actually. Now I'm kind of doing it live. Oh, right here. Oh, that was easy. So right here is a death cross. Oh, sorry. You had the 50 period moving average cross over the 200, cross under the 200, which is a quote unquote death cross. And look how the market reacted to this one. That was a pretty large, steep decline. That was in December of 2018. I remember when that was taking place. That was pretty impactful move on the markets. Now that was a death cross and it had a negative effect. So we had the golden cross here that we just talked about, right? And then that had the positive effect. We had the death cross there. And now let's go back a little bit further just to see if there's any more interactions between these two moving averages on the daily time frame. Now we're going back pretty far. Up right here. Okay. Couple times actually. So we have and notice how on the death cross it doesn't stay too far at, too long underneath it, but we had the golden cross here, and that looked actually kind of like the price moved down to the 50 period moving average, which is interesting because the price right now in the current chart, in the current price action, is higher than the 50 period, but we got that somewhat of a pullback retraction because of a powerful move, right? We had a powerful move and then the price retraced, which is somewhat normal, and that's kind of what's going on right now. It looks like it retraced into the 50 period moving average and actually kind of held up right there. We had a bounce and it kind of interacted like that, bounce, and then we had a little flash crash right there, a few days, and then boom, it really fastly retraced right there. Now, if I scroll back a little bit further, just right here, you see another death cross. So the 50 period, I mean, it looked like it was trying to be a golden cross and then went right back down to a golden cross, right? But then look at that interaction. As soon as this stuff took place, you had this big pullback right here. So it happens and it looks like the market responds to it is what I'm trying to point out. So when we're looking at the current price action, I am not predicting per se as far as like, hey, this means that the market's going to go sky high. That doesn't mean that I'm saying that it can't go sky high, but I do want to point it out because the market looks like it responds when there's a positive crossover like this and a negative crossover like that. It looks like it responds. So we're about to see a bullish crossover. Now, as we saw in the previous history of the chart, there was one time where the 50 came up and then it actually contracted back down. So, it's very possible that might happen. And really what we're just doing right now is what I'm trying to do is just educate you and make you prepared for specific moves. The context is most important when it comes to trading, right? I keep on people saying, oh, you're very bullish or you're very bearish. No, quite literally the opposite. In order to be a successful trader, you can't be a bull or a bear. You need to be a wolf. It's just like Robert Kiyosaki says, every coin has three sides. You have the heads, tails, and then the edge. It's just like the stock market. You have the bulls, the bears, and the wolf. The wolf is prepared to move in either direction. It is ready to go long when it needs to go long. It's ready to go short when it needs to go short. It is just ready to attack. And a lot of the times the wolf will hedge position. So if they're bullish the market, that doesn't mean that they're not going to have a short position against it. Like for example, you can have long common stock, but then you can have short option puts in order to hedge those positions. You need to be a wolf. It's not either or, especially in the markets like this. Buy the dip, sell the rip, be prepared, be a wolf. All right, that is enough of that rant. The last thing that I really want to point out on this daily time frame is the MACD looks like it wants to start curling over. It's still above zero. So if we can get a move like that and it starts spreading and going higher, that is also showing that, bullish momentum is continuing. Now it's not quite there yet, but it looks like it might. So there's a lot of things in the bull's direction, and that's why I'm saying it's a buy the dip, sell the rip type of market. And as of right now, the price action looks like it wants to head down and it's in a big area of resistance, but then we have this taking place on the MACD, lagging indicator, right? We have the golden cross taking place as far as the moving averages go, which helps understand context of a chart. Then we have some very strong support where this golden cross is taking place. So yeah, we might see the price pull down, but man, it is running into just like a monster area of support where we can see it really take off from that point. Or hey, it might all fail. We might get some horrible news of, you know, whatever the case may be, and it could crash. That's what I'm saying. Be a wolf, be prepared. Let's move to the 30-minute time frame so we can get a good sense as to where the market might be heading and map out some support and resistance area. All right, we are here on the 30-minute time frame. Now, I want to just kind of like walk you through this, because if you're looking at this and you're like, there's lines everywhere. Yeah, let me go ahead and kind of walk you through what those lines are, and then we're going to clean them up, because I just want to go over yesterday's video a little bit just so you can see how price interacts and what we've been doing. It just makes sense to follow up. So first off, this blue vertical line, that is where the day started, okay? So I'm just going to clean that up by notice right here, this candle where my mouse pointer is at, that's where the day started. Okay. So we get this gap down, all right, and then it kind of moves a little bit lower to the day. So overall, just not that great of a start of the day. You know, you get something down, you get a gap down, it moves lower and lower. And now this area we actually marked out as an area of support. So when the price started moving downwards into it, right, typically it's a zone, right? That's how support and resistance works. It got down, but then it started moving itself up, and this 30-minute candle closed above it, meaning that support actually held. So it formed a nice hammer candle and we moved up higher. Where did we move? Well, we moved into an area of resistance, which was actually marked out from yesterday's resistance. This is the beautiful thing about technical analysis. I love technical analysis because it really sets you up and makes you prepared for things to happen, especially if you're an intraday trader. I absolutely love it. So we said 3182 was the area of resistance. Look at it, was pretty darn close here. Could not get and close above it. It acted as resistance. That resistance held, and then it got knocked down. So the price came down. It almost touched back into this 3165 range right here with this candle. Bounced from that area just a little bit, so the support is holding, kind of tracking sideways, okay, after pullback. So when you get a pullback like this, right, pull back, and then it tracks sideways, you get somewhat of a bear flag. So it kind of formed a bear flag, and then it broke down. Notice how this candle stopped right here on the support, and then finally it broke down and closed below it. Now that was a very bearish sign. Once support is broken, in technical analysis terms, it then becomes resistance. So to clean this chart up a little bit more, I'm going to make that our area of resistance. I'm going to take off the 3200 as of right now. It's still a valid area. It's more of a major area of resistance, but I'm going to just take it off the chart just to have it there. And I'll keep this one up here, 3183. That's fair. Let's keep that one up there. And then notice how this area of support, it really kind of just blasted through it on the 30-minute time frame and closed below it. So once support gets broken, it then becomes resistance. So this right now is going to be back to resistance. Now I'm kind of interested because the price on the 30-minute time frame, it crushed through this. So I want to just zoom into that candle and see how it interacted on the 3150 level. So really quickly, this is the 5-minute time frame. Notice how it did, the 5 minutes stopped right here, and then it really, once it closed right below it, you saw a flush. So that's typically what happens when support holds, and when it breaks below, especially major areas, it really just takes a big hit. And notice the next candle, it tried to go back up and retest it, and then failed and moved lower. So kind of interesting, but still the 3150, man, it was kind of ignored on this time frame and the 30-minute and just really crashed down. Now I know my intraday traders, my smaller time frame traders would probably appreciate that, but I like 30-minute time frames just because it gives us a good overall idea as to where the next day could go. You can look at the hour, you can look at whatever you're most comfortable with. I just personally like the 30-minute time frame because it gives us a little bit more different data points, and yeah, it's just something that I feel comfortable with. So we're over here mapping out support and resistances now. The close below this 3150 is now resistance. So yes, that will be an area of resistance. And you know what? You can call it somewhat of a zone. This 3150 can technically go up all the way up to about this level right here, 3150 to 3155. So keep that in mind. It is a zone. You have a window right here in this kind of a gap right here, from this point up to here, and then you notice this wick right here actually came down and touched it as support. So keep in mind 3150 is what we're going to call it, but it's a zone, it's a range. So 3150. Now let's look for support. So as you know, these purple lines are for the rising wedge pattern, which, you know, we still are kind of wondering, hey, are we just early to this pattern? I mean, it looks like it's working out pretty decently for the most part, but you know, it could be just sheer luck from this, from what we're looking at, you know, but it is holding for the most part. Let's keep that trend line right there, because if it does break below it, we might see a bigger break. And if it doesn't break really below it and comes right back up, well, let's just get rid of that, rid of the pattern. Now, as far as an area of support goes, an area of support that I want to point out right now is going to be 3142. You can call it 3140, and here's why. It looked like that was the low of today, and it had a little bit of a bounce from that point, okay? And if you look in the history of the chart right here on July 2nd, that right there is a, that candle right here, it's the high of that candle, so it acted as resistance here, it acted as support there. Once resistance is broken, it then becomes support. So 3140 is going to be that area that we're going to look at as an area of support. Now, you can look back a little bit further and notice how it kind of touched it a few times here. It's, like I said, a zone. So let's go ahead and just mark a little bit lower as far as what an area of support can look like. And I'm going to say right here at this range, 3124. We called it yesterday on the daily time frame, 3120. Now, to make it easy, we can call it 3125 or you can call it 3120, whatever you feel comfortable with. But I'm going to just put it here at 3124. I'm going to call it 3125. So why am I calling it 3125? Well, clearly this candle right here on the 30-minute time frame came down, touched, and it acted as support. But if you look back in the history of the chart back here on July 1st, it was actually acting as resistance throughout the day. So once resistance is broken, notice that big gap up, it then came back to test that gap, and it acted as support. So resistance was broken, then it became support. So now we're looking at 3120 range, right, as the main area of support. Now, if this really is a rising wedge, we can see that crash below this because rising wedges can be a pretty dramatic pullback. So, but these are the areas that I want to keep a close eye on for the most part going into tomorrow and the remainder of the week. These are somewhat tight ranges, so, you know, the price action could easily, you know, gap below or potentially even gap above. Just got to keep an eye out for it, okay? But these are the levels you want to look at if you're an intraday trader. Areas for bouncing, you know, areas for, you know, if you want to buy the dip or if you want to sell the rip. Like I said, when the price was up here again, what I did was, because it's an area of resistance, I just sold into it. So when I sold into it a few contracts, it was just, you know, an easy profit. It wasn't too hard. It was a major area of resistance and a major area of support are areas that I like to play. When I went back into the history of the chart, remember when it bounced on 3,000, when it just tiptoed right here, like kissed it. And that was when I was in Arizona, man. And I don't think I'm ever going to forget that just because, oh gosh, that would have been a bigger trade, and it wasn't. So I failed. I have failed you all. So that is all I have for you today. Those are the areas to keep an eye on. Like I said plenty of times before, focus on risk management. Don't focus on big wins. Focus on little losses, and the big wins will eventually come. Be patient, be a wolf, attack when necessary. Everybody have a great day. I will see you here tomorrow. Bye.